Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We are going to start our show today with the product of natural gas. Folks, this is a pattern that is completing. As you can see, the ABCD pattern, it is there. We're looking at 7 down weeks coming in just about right now. And so we want to pay very, very close attention to that for 2 reasons. One, the Cycles Foundation is having their teaching program this week, Tuesday, Wednesday, and Thursday. And yesterday, they had some cycles on natural gas that I'm going to share with you in just a little bit, along with the other things that were shared by Larry Williams and also by Dr. Richard Smith. I'm not allowed to send these charts out to you folks. If you want them, all you have to do is to go to the Foundation FSC, and you can either subscribe, if you subscribe to the 3 days of teaching, which is $94, all of it recorded, $97. It also gives you a 1-year subscription to the monthly letter, which is in itself worth far more than that. So I would highly recommend that you do that. Whether you do or not, of course, that's up to you. I do things a little differently. Mine are a little bit shorter term most of the time, but when I see something long term, like this big ABCD pattern that is here, it's really important. But this is really strange what's happening today, folks. As you can see here, the target that we were looking for comes in at roughly $2.99, roughly $3 per cubic foot, okay? That's what we're looking for. The low today has been $3.32 per cubic foot, okay? But the important thing is I want to show you that is the February contract. If we take a look at the March contract, totally different. I mean, this is like night and day. One of my friends brought this to my attention today, and if you'll remember, we had Michael Moore of Moore Analytics on last week on the 6th, and the 5th, and it was really a good show, but he talked about this. But look at this. The natural gas for the March contract has gone way below. We were 20 cents below. We're almost within $2 of the exact 1.618 expansion of that whole move for the year. This tells you it's highly indicative that this may be a major butterfly bottom down in here of what we're looking at here today. So I think we have to pay very, very close attention. This is trading for $3.19 at the bottom down here. The low was $3.12, but 3 is trading. Well, I think it's $3.26 now, but at $3.12, when we hit that, we were 20 cents higher. In other words, $2,000 higher in the February. And this is in a bear market. That shouldn't be happening, but it is. And we got a couple of inquiries out with Mike Moore, and then also for Rich Anderson to try to give us some information. I went online to the Merck to see if there was any information, but there was nothing there, to really speak of. Now, I wanted to bring a chart that was brought to us by Dr. Richard Smith yesterday. This happens to be the 11-month cycle that they're looking at here in the natural gas, and it is due right now. And it was strange that I was watching that show and then looking at it. You'll see that we're due right now, and these are the levels. We've already done the ABCD. Folks, I have done these cycle things for years and years and years with the cycle programs, and they have all these sophisticated Fourier analysis stuff. Folks, I can honestly say it's a real quagmire for me. I mean, I look at these, I see how that looks really good and everything. And yesterday, when I heard Larry Williams, who's as good as anybody there is in this business as far as trading, he's in the same class as Tom Hugard and Richard, what's his name? Oh, not Richard. Oh dear, I'm remembering these names. He's been sitting here in my office before. Stevie Cohen, all those guys are in a special class because Mr. Z at the room there, TFNN, is in that class. Anyway, if you pay attention to this, what it does is they curve fit these things, in my opinion. The reason why I say that, I watched both of those programs yesterday, 1 hour each. I watched Larry Williams, and I'll share the charts with you at the second part. If you want these charts, you're going to have to get them from Foundation for the Cycles, because they asked me not to. I can talk about them and show them, but I can't forward them, which I can certainly understand. However, Larry went through this, and Larry is absolutely incredibly bullish stocks. I mean, he said that he is so bullish that he will probably lose his title as the legend if this thing doesn't work out. And of course, everybody got a big chuckle out of that, but he was very serious about a potential for a really, really big move in stocks. And I'll show you the pattern that he's looking at. But that was totally different than what Dr. Richard Smith brought out. So I'm going to cover these at the second part of the show, but I want to cover a couple other charts that are making major patterns today, not just the natural gas, but we've got another one up here that is really interesting. Get this up here, and I wanted to show you. This happens to be the chart of the daily chart of copper. And we're approaching that pattern. You'll see we have the extension. You'll notice we had two patterns, one completing today at 411, but the bigger one, which is the more important one, is the one up there at the 1.618 expansion. And that's the big ABCD off of the whole move right here. That's the big ABCD as opposed to this little one. That takes you into 424. And so we're only 7 cents away. We've already gained more than that today. So we should be there tomorrow, maybe even today. So that's what you want to be watching for, because that's a major, major completion of a cycle that's been going on, for well over 4 months right now. So that's a very, 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 very big pattern completing in copper. And as everybody's referred to the old history that, the stock market always looks to Dr. Copper. If copper is up, stocks are up. Well, that's certainly what's been happening right now, but that's still, up in the air. Now, I wanted to bring one other, well, I haven't got enough time here for this next segment, but I have to talk a little bit about crude oil. If you remember last week, we had Mike Moore on, and he talked about the leader of the crude oil complex is heating oil. And he's going to be back on with us the 19th to describe more of what he was trying to teach us that day, because today was a really, really strong day to teach that principle about heating oil, how it leads the market. And it was a perfect example of it today. So we're going to be covering that as we look at some of these charts here today. And when we come back from the break after this one, I'm going to cover just a couple of these charts here, especially the heating oil and then the crude oil. And then we'll get into some of these cycles, things from the program yesterday from the Foundation for the Study of Cycles. And we'll start that with corn, because he had a really strong indication for corn. And I think you folks that trade corn will have a really interesting segment to stand for when we come up here right after the break. So let's take a little break here and pay a few bills. I hope I'm going to be able to pay a few bills here, and then we'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted the chart of the heating oil and the crude oil overlaid over each other. And what I've done is I've inverted it so that the red, which is the heating oil, is actually turned upside down. The reason why is if I put them in together, they're almost nearly perfectly. But what I wanted to show you on this chart is the fact that you can see the cycle highs and lows hit exactly like they're supposed to. Now this is reversed. You see, this is actually reversed. This red one should be upside down, put up right here. But if I did that, they overlay each other so nicely you don't get to see the really difference of what really happens. Now you see during this period right here, one was going up and the other one was going down. That does happen. That's an inversion. Here's another one flipping also. But you see most of these, the timing signals that you have on these is very, very important. When Mike Moore was on, More Analytics, back on the 6th of January, was that the 5th of January, he told us, he said that the real key to that market is to watch the heating oil because it leads crude oil. And folks, he is absolutely spot on. I wanted to show you this today because it was really a strong indication. This is a chart of the 4-hour heating oil. This is going to be a big, big improvement in crude oil trading. I've only seen one example, but he was so strong about this, I'm going to go back and check other examples. You can see the nice little Gartley sell signal that it had here. Perfect ABCD right at the 61% retracement. Then it comes down and look, it starts making higher bottoms, the 135 pattern. Today was the key. You see that 382 retracement there off of that last low right here? The crude oil itself was already breaking down below some of these lows. It looked like it was breaking down, but the crude oil was actually being held back by the heating oil because heating oil was getting ready to break out to the upside. Of course, once that happened, crude oil reversed, but it was following the heating oil. And as you can see, we went up and made a 61% retracement today. So this is a really, if you're going to trade crude oil, and I'm going to do some research on it yet, so watch that heating oil, because today was a perfect example of how the strength of that heating oil was telling you that it was masking the weakness that was not really there in crude oil. So even though crude oil wasn't as strong, heating oil was telling you, stay with us, pal, my cousin's coming right behind it, and that's exactly what happened. So that's it. All right, let's get into some of these charts that we got from the Foundation of Study of Cycles. I'm going to start out with Larry Williams's charts, and this is his basically, this is the really, really long-term pattern that he looks at in stocks. It's basically the 40-month cycle, which they all agreed on that the 40-month cycle in the stock market was by far the most prevalent of all. This was the long-term pattern up through recently, but he was basically showing you that, you know, it does have periods where it doesn't quite look right, but overall, if you stick with it, it does a pretty good job. These are the kind of trades that, and I'll show you in the next slide or two, why he was so bullish on stocks and why he remains bullish on stocks. And just given a few minutes ago when the stocks exploded to the upside, no reason to not believe that that's not so. So here's the reasoning for what he's looking for in stocks over the next couple of years. Now remember, Larry offers a yearly forecast. It's, I think, $95 or $125. It's not very much at all, covering all the markets and all the cycles with these types of cycles that are in there. If you have an interest, just go to ireallytrade.com, Larry Williams, and you can buy buy it. I look at it every week. Anyway, you'll notice here, these are the cycles. What he's looking for is where these cycles come together. Now, he's super bullish here right now. He really thinks this up into April is just going to be something spectacular. And if we get above 40.50, which it looks like we're going to be able to do that, you're flat going to see some really big moves to the upside, because that would be the bottom of that 4-month cycle that we had back in October, and that means we're going to be going up into that level anyway. So anyway, here's what he's waiting for, is this particular alignment where these cycles come together. That's called summation. It's right out of Jim Hurst's book, Summation. That's where some of these cycles come together. Now, there's other ways of doing it. In other words, you can measure from cycle to cycle, and when they line up together, that looks pretty good. But they got all these sophisticated programs in here now, the computerized programs that go in. And part of the problem with them is, folks, they are basically what we call curve fit. They won't admit to that, but I've done enough work in these things that I already know that they do. And the fact yesterday that Larry was so wildly bullish and Richard Smith, on the other hand, was not so wildly bullish. So, okay, the next one that Larry was talking about, of course, is his forecast from last year. And he was very proud of that, and he should be, because it was very accurate. You can see from just looking at it, we had the top up in here, we had the bottom down in here, and by golly, it did a pretty good job. So this is what he's looking at. He does these each year. But look at this. You see, they got a lot of variance in some of these things. So you've got to use a little bit of common sense or use some patterns. And that's what I try to do. I know one or two good little things. Now, I'm not in the best of moods today, folks, because I've been doing this 24/7 thing for quite a while. This is the first time we've had 3 losses in a row in a very long time. They weren't big losses, and they were right at the high tick. So that's neither here, or low tick. It didn't make any difference. But that's neither here nor there. But I hate to see that happen. But believe me, there's going to be as many as maybe a 7 or 8 sometimes that happens. But boy, after those, there comes a nice long streak. So stick with it. You got to keep doing the patterns, because you don't know which ones are going to lose and which ones are going to win. You're just never going to know that. Okay, now the next one we're going to look at is an interesting one, because he doesn't do stocks too often, but he did this because Apple is such a big stock in the Dow Jones and also in the NASDAQ, and it's the most widely held stock. But you can see it does have a pretty good job. This is a short-term cycle forecast for 2023. So, right now you see we should be making a high up in here. Could be rising up into that today or so. Then we have a move down. But keep an eye on this. go to the Cycles Foundation, get this chart, or ask Larry for it, and see how it follows with it. Because if it's following, it's probably going to continue following. But cycles shift. They go back and forth. They also mentioned that one of the pioneers of cycles was Arch Crawford. And the kind of the cycles that Arch uses. The same kind that are used by Shane Smullian, Norm Winsky, Tim Bost, and Bill Cerubi. And Bill will be on today, I believe, on the cycle. He'll be on our show tomorrow, will be our guest. So that's what we're paying attention to today here with the cycle part. When we come back from this, I'm going to spend some time with a lot more charts, and these come from Dr. Richard Smith from the Foundation of Study of Cycles, and I'll show you how to derive some of these things, the good, the bad, the ugly, whatever it happens to be. But before that, I have to share with you the start of the second segment of this comes from Dr. Richard Smith, and it's the corn cycle. So you farmers pay attention, because he made a heck of a big prediction here in corn, and that is we made a major high here in corn, and we should be coming down. We'll discuss this chart a little bit more when we come back from the break. So 877-927-6648. If you have any questions, I'll be more than happy to answer them for you.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, now this is the corn chart, corn cycles that you can see here. It's very interesting. This is from Dr. Richard Smith. This is a 5-year cycle in corn. Now, you notice some years, if you look at this really, really closely, and that's what we're going to do here, some years it does absolutely nothing. Other years, it does a great deal. And son of a gun, guess what? I lost the chart, so bear with me here. I'll bring it back up, and you'll be able to see it, and we'll talk a little bit about it. Hold on here 1 second. There it is. You'll see here, there, I think we're okay now. You'll notice here, this is, look, it looks some beautiful highs, but look how far off it's off from the high right here, folks. And, you know, here it hits, it's pretty much spot on. It's not really close right in here. What that's doing, folks, is it working now, Al? Is the chart coming through better? Okay, but you see, for trading purposes, by golly, you know what? Nothing beats ABCD in my opinion. You know, I like to listen to these guys and stuff, and they make a beautiful case for it, but when they start to bake the cake, something goes wrong with the flour or the yeast, so I stick with what I know, folks. I enjoy the cycle stuff because I've looked at it, but by golly, you know, you've got to have a place to say, you know, you're wrong and you got to get out, and that's where when these patterns fail, that's what you have to do. I mean, there must be something to it because we're not profitable every week, especially not this week, but by golly, most weeks we are. Hardly ever do we have a losing month, but that might happen too. I don't know. But, you know, you got to be able to watch some of these things because maybe they might have some, you know, thing. That's why I got involved in astrology, because it seemed like it was a little more accurate than just, you know, looking at some of these things. So let's just look at some of the cycles that Richard had that I thought were very, very interesting. The first one that he talked about was and they mentioned the importance of Richard Marx, and let's get this up here. Hold on here. Give me a sec. Hold on a second. Let me get this chart up here too, because we've shown this before. He's from Oak Tree Capital, and he basically said that, you know, there was a sea change coming, and Richard Smith believes these cycles are showing a sea change too. You'll see some of them, but it goes through and shows you, you know, the difference between what it was between 2009 and 2021 and where we are today. It's tightening. The 10-year yield is higher. You know, we've got, you know, inflation likely. You know, my goodness, you know, there's buyers are getting hesitant. And people are worried, and we got a possible war with Russia. All these things are on the right side of the ledger, which we never had before. And of course, we had easing of the Fed during 2009 to 2021 also. So that was his premise, that we are going to be looking at some pretty lean years here for 23 and 24, just the opposite of what Larry was looking at. So you have to pay your money and takes your choice. He wanted to show the effect of wealth over the last 60 years, the cycle of wealth that's been going on in our world, which we see it everywhere, in real estate, automobiles, fashion, college education, the whole airplane rides, everything. You'll see the wealth effect. But look at this, folks. There's your A leg right here. There's your B leg right here. There's your C leg right here at the 382. And I just did it. I printed it out. And guess what that is up there, folks? That's point D. That's AB equals CD. Johnny's raising his hand. Curly was right. One thing is important. Watch that ABCD. Okay, the next one that Dr. Smith brought to our attention is the fact that the 10-year yield. Now, this one goes back a long time. We've seen some of these through the eyes of Bill Cerruti. His real name is Bill Cerruti, folks, but he goes by the pen name of Bill Meridian because when he was working on Wall Street, they didn't allow him to use his real name, and so that's why he used Meridian. Okay, anyway, you can see this was the high back many, many years ago, 1765, or 1792, whenever the country was formed. We had high interest rates. Here's where we were in 1980. And you can see here's where we've come down to now. He believes we're going to be going up to about 8% from where we are right now. We're about 4 and change, but he thought we would be going at least to that level and maybe a whole lot higher. The next one that he wanted to talk about was the S&P. This was the 1-year cycle. Basically, it's 54 weeks. Let's get this up here. And there's going to be a segment of these, and some of them this is why we use patterns, folks, because some of them work part of the time and others don't. You can see, look at this, how perfect this one was. But this one certainly wasn't perfect. This one's really good. This one wasn't perfect. This one wasn't perfect. Heck, I want something better than 2 out of 4, folks. I want something at 53 or 55% anyway. And not only that, it was a great description of these and how to use them. I'm just giving you a rough idea of why I do what I do. I keep it as simple as possible with simple time counts, just like I was doing on natural gas, counting the number of weeks down. This is the week we want to be expecting a low in natural gas. Maybe this was a low, maybe it wasn't, but it's getting pretty close. The fact that the March has gone $2,000 beyond its target, and the February, which is the lead contract, is $2,000 above the target. So one of them hit it, one of them didn't. So that's the important thing of watching these things, and it's very, very important. Now here it was everybody agreed on this. Everybody, the people that were writing in, people were calling in and stuff. But the one thing that Richard Smith and Larry Williams both agreed on, the most important cycle in the stock market was that 4-year cycle. I'll get this up here so you'll be able to see it here quickly enough. And there we go. And this is truly a beautiful cycle. I mean, you can see here again, this one was pretty much spot on. This one was pretty good. This one was off by quite a bit. This was off a little bit. But the overall structure of it was still pretty good. And that's what the cycles are supposed to be showing. Now, they're forecasting lower cycle high. So whether that's going to happen or not, it's happening so far. But remember, we just started this thing in January as far as the market rolling over a little bit. So we don't know. But the theory of the cycles is correct. And he's got some of them in here that are really interesting because they're smaller time frames. Look at this cycle here in the S&P, the little 10-day cycle that's there. It's just been really quite good. Get this up here so you folks can take a look at it. But look at this, is a 10-day cycle. We come down, we rally up a day or two. We come down, we rally up 2 days, come down, rally up 2 days. This has been a pretty good predictor of that. Now, what we do is we look at the patterns, the ABCDs, the retracement numbers and stuff like that, and that's what we would be watching, is because that's what tells us what our risk factor happens to be. And that's the fact that one of our trades yesterday was we had a sale in the S&P at the 618 at 39.43. It worked in our favor about 10 points and then turned around and took out the stop, which was 10 points. And then we also had a trade in the Treasury bonds. We sold the 382. We got stopped out at the high tick on the 61% retracement, and that we lost about 14 pips in that one, and then that was it for today. We didn't get a chance to do the natural gas because by the time we had all the information out to you, the market had already moved quite a bit. So there's no way that we could actually, count that as a trade of any kind here. So, all right, we're going to take a little break here, I believe. Here, when we get back, I got a couple more of these charts, and then we're also going to be talking about the dollar, the U.S. dollar, because it's certainly acting like it wants to go a lot lower. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the opening call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, the next cycle was the most important of the ones that he put up, in my opinion, because it was the most perfectly symmetrical cycle that you could ask for. This happens to be the 4-year cycle on the Treasury notes. And as you can see here, the high that we had several years ago, you see we're coming down here now. And what we're going to be looking at now is he believes we're going to get up to about 8% over the next couple of years in interest rates. Now, that's hard for some people to believe, but for many years, we were at 5 or 6%. So anyway, that's what his prediction is for that particular cycle. Now, what they do, and which is very, very important, is they look at summation of cycles. In other words, cycles, that these different cycles come together at the same time, and that's what really gets it really interesting. Now, this next cycle is that same cycle brought up to date. Now, when they talk about the summation cycle, folks, when several cycles coming together, I know they didn't talk about astrology, and believe me, Richard, Mr. Dewey, that started to do this many, many years ago, he really was into cycles for astrology, especially lunar cycles and cycles related with Mercury. They gave Gertrude Shirk, who was his secretary for many years, he died in 78. She carried it on until 94. And when she passed away at the ripe old age, I think she's about 95, but she was very, 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 very smart lady in mathematics and stuff, and she kept it alive for quite a while. She was also a strong believer in the astro cycles. They gave Arch credit, Larry Williams gave Arch Crawford's credit for some of his astro work, but Larry never really got into that stuff by very much at all. I don't know if I've ever told you this story behind Larry Williams. I've known Larry since 65, but in 1986 and 87, when I was writing the book, Astro Cycles, A Trader's Viewpoint, I didn't know how to sell it. I mean, I had the book all printed and everything, and I called Larry. He was down in San Diego, at Rancho Mirage, and I called him, and I said, Rancho Cucamonga, what is it called? Is it Rancho Mirage? No, I can't remember. Rancho Santa Fe, down in the San Diego area. And I said, hey, look, I got an idea. Can you give me an hour? He said, come on down, we'll have lunch. So I went down, and he was playing handball. And I pulled into the driveway, and he had a Rolls Royce there, and the keys were still in the Rolls Royce, and the door was unlocked. So I took the keys out of the car, and I locked the car, and I gave the keys to the. She said, "Oh, he leaves it unlocked on purpose." And I said, "Why?" He said, "Nobody steals a Rolls Royce. They can't sell a Rolls Royce because they steal cars and sell them for parts. So no one steals a Rolls Royce. So no one stole the Rolls Royce." So I got there. I showed Larry what the book was, and he said, "Look," he said, "now give me a couple hours to go through this." He said, "Take the car for a ride." I said, No. I said, "Go through it." I said, "I'll come back." And I said, "We'll have dinner." And then so we took the book. About 3 hours later, I came back. He went through it, and he said, "Look," he said, "this is a home run." He said, "You're going to make a lot of money at this." He said, "But I can't put my name on this book, even though you'd like for me to co-author it because, we could sell it." He said, "But you can do really good." I said, "What do I do?" And he reached behind his filing cabinet there, and he pulled out a sheet of about 3,000 names that he had, and he said, "Look, these people have bought esoteric stuff," because he had done work with Gann through the years. And he said, he said, "The list is pretty accurate." He said, "as far as addresses and everything." He said, "Send it out, write a little flyer and try to sell it." So that's what I did. And I sent it out, and by golly, from then it was golden after that. And he never took a dime for it, never asked for it, and actually turned it down. But that's how I got involved with him with Astro stuff, because he had looked at some of it, but not to the extent that I had done when I had worked on the book. Anyway, getting back to that, so that's why I got into the astrology part, because the summation of those cycles, in other words, whether the 14-day, 18-day, whatever, these were cycles of Mercury and Mars and Saturn and stuff that you see when you look at a natal chart. That's really the same thing that you're looking at. It's a different way of looking at it. The trouble is, because it's got the A word on it, not the F word, but the A word, astro, you can't get people to pay too much attention. Now, on my bucket list, I expect someday that son of a gun's going to be right on CNB and right there on Bloomberg and Financial Times and Wall Street Journal. There's going to be all kinds of, look what Harvard has done, or look what Oxford or Cambridge has done, all these, Stanford, somebody like that. It's not going to be from somebody in Tucson, Arizona, even though Arch lives here too. It's just not going to happen. Andrew Lowe could do it. And in his book, An Evolution of Technical Analysis, first 50 pages, he said the first technicians were astrologers back in the Sumerians and Babylonians in 5,000 and 7,000 BC. So I don't want to get into the quagmire of looking at it, but I have these guests on because they're really good at picking these dates. You can't deny that. But the cycles that they're doing here, these are very, very good cycles. But frankly, I strongly believe that it's more astrological than they like to give it credit for. So I want to give you a couple others of these that were interesting, because they did have some. Just a second, if I can get it up here to work. Okay, now here is the natural gas one that while we were looking at it today, this was really funny. I'm watching this show yesterday, and I didn't catch this until at the end of the show when I was re-listening to it. They're looking for a bottom in natural gas right about now. What am I doing? I'm looking at A, B, C, D and saying, hey, look, maybe this is it. We've got this big divergence between March and February. This maybe means something. Just before we came on, we just made new highs for the day. So I just don't know whether this is going to be, a move that is going to be continuing to the upside. I don't know the answer to that. But I was watching it as we were going through some of these things, as we were paying attention to them, and just for kicks and giggles, this is just what I had today using my very simplistic AI interpretation of what the markets are doing. I'll get this up here so you can take a look at it. This is what we were looking for this morning. And so far, you can see there was the bottom in the market right here within 10 minutes, and we should be topping here right now. Now, the problem is, at the last part of the day here, this is the part of the day that is the least reliable, because by the time you've gone through 200 bars, you see, so you could easily turn, and this could invert right here, and it can continue going higher. That's why you've got to be able to use the numbers. Now look at this. There's your 382 retracement right here, folks. There was your 50% retracement right here. How hard can that be? And what does that make that? That makes that a 1-3-5 pattern. That's it. So that's basically what you're looking at. So that's my interpretation of what we have going on here today, and I hope you liked it. And if you didn't, that's okay too. I have one other one that I wanted to share with you, and that is an updated of the 5-year corn cycle. This is the same thing that we were looking at before, only it's been updated as of yesterday, excuse me. And you'll see here that is following along pretty good. Now you can see it had a very good move here on the bottom. This one didn't work out this was off by more than 6 months. This one was pretty good. This one was pretty good. This one didn't do anything. This one was off by quite a bit, but these are working right now, so we got to pay attention to corn. We'll take a break. 877-927-6648. Billy Ray Valentine, Capricorn.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, the last section that Dr. Smith from the Foundation for the Study of Cycles presented was his time horizons of the things that he's looking at presently. But notice here under notes for the S&P 500, you'll see here that he has a bottom being formed here in stocks here on January the 13th. That's 2 days from now. It looks like it could be inverting and making a high, but we still might sell off for the 12th and 13th. So let's pay attention to that. Remember, the 13th is a very, very important day here at TFNN, folks, because it's Basil Chapman's birthday. And anyway, I want to wish him a very, very happy birthday, being the leader of the pack here, along with Tommy. Anyway, if you take a look at the other one that's there, is the 24th of January. There's a 42-day cycle coming in on corn, okay? So that's another one that could be bottoming, so we should be watching that. Now, those are time counts that we try to cover when we're doing our charts each week, because we look at the number of days up and number of days down. This was work that Larry Williams presented back in 1977. I think he charged $10,000 for the research, and I was Drexel, and they bought everything I asked them to buy, so we had access to that, and by golly, that stuff does work. Especially when you're looking at an ABCD pattern that says, yeah, it's going to go up for 8 days and come down 5. Well, that's 13. Shut the front door and raise the rent. Boy, that's major mathematical stuff right there. So anyway, those are some of the things that I'm looking at here. Someone's asked a question, well, why did I watch the Cycles program? I wanted to see what they were doing because I'd done that type of work before. They've expanded it. They've got major computer stuff they got one computer program that's $56,000. Called a CQT Supremacy or something like that. And I asked Larry Williams, he said, hey, it's so far over my pay grade, I wouldn't even touch it. And I said, well, I know what that's like. So anyway, that's it, folks. Live every day in an attitude of gratitude, and may God bless. And we'll see you tomorrow with Bill Meridian as our guest.